Well, hello friends. Hey, it's Jamie here with Reese Homes. I hope you had a wonderful holiday season, made many great memories with friends and family, and also enjoyed a great New Year's Eve celebration. Now that we're a few days into the new year, we are looking forward and wanting to update you on the market. So what we're going to do today is take a look at 3 market indicators that we're watching, tell you what they mean, and then also talk to you about some upcoming client events that we've got in the schedule for the next couple of months. All right, so 3 market indicators that we have been watching for months and continue to watch are inflation, which what we've seen is we've been observing this going down for about the last 4 months, finally getting that under control, which has definitely had a wonderful impact on economic stability. Now, as part of this, what we've seen is we've seen economic growth slow a bit, which is actually what we want overall. It'll help keep inflation under control. And what we've also seen is one of the control mechanisms they used for inflation was increasing interest rates across the board for federal funds rates, and that also increased the borrowing costs for businesses and home buyers. Now, those borrowing costs for businesses have made businesses a little bit more risk averse, so you're seeing them start to minimize their risks, and that's leading to some layoffs. Though if you look at this in the broader picture of a lot of the economic forecast that we saw this time last year, they were expecting that we'd already be in a recession right now, and we haven't gotten close to that yet, and we're starting to see some signs that that may not materialize in 2023. We might just have slower economic growth, which we think is overall positive. Now, when we look at mortgage rates, one of the great things that we've seen in the housing economy is while Fed fund rates have continued to go up and probably will go up a bit more in 2023, mortgage rates hit their peak back in early October. So we've had almost 3 months of declining mortgage rates that took us from the mid 7s down to the low 6s today. So that's definitely helped get more buyers and even more sellers into this market and getting the market moving a bit more. And we expect that that's probably going to continue this year. So let's talk a little bit more about our expectations in 2023. We expect to see increasing inventory, though that inventory should modestly increase. Couple of reasons for this. Still, we're not building enough homes to really meet the needs of everybody that are out there. And secondly, there are going to be some sellers who will sit on the sidelines. So some homes that might have otherwise come to market based upon a specific need that a seller had in terms of moving up or down, they'll just sit on the sideline and wait for the economy to be a little bit more predictable. Now, what that's going to mean with that increased inventory is slowing price growth. We're not going to see the kind of price growth that we saw over the last 3 to 5 years, though we don't expect to see significant declines in prices either. We will see in some areas some declines in prices, but probably giving prices back to maybe the 2021 level, depending on how the broader economy continues to evolve. What this is all overall going to mean is that income stability in 2023 will be the key to opportunity. We are seeing some layoffs out there, and so if people who are going to feel a bit of instability with regard to their job or their income will probably sit on the sidelines. That said, those who feel stable and have a down payment or have some funds to work with can take advantage of this increased inventory and less competition market to make their moves, whether that's selling and buying or just buying their first investment property or first home. Right? The other thing that we look at right now is interest rates are still higher than what we expect them to be over the coming years, where we expect them to get down into the high 4s or maybe mid 5s. So that means that today you can get in on a budget that you can afford today, and you can look at the opportunity to refinance tomorrow to lower your ownership costs for the long term. All right, so let's talk about client appreciation events. These are some of the favorite things that we do each year, and if you'd like to know more on the specifics and the strategies on buying opportunities in 2023, well, then we would hope that you join us on January 19th for the return of our Sips and Tips events, where we provide drinks and refreshments and a little bit of information, 20 to 30 minutes about a market update and strategies, and then another hour or so to answer all of your questions, whether it's about buying, selling, any sort of real estate related question you can throw at us, and we're happy to answer that. And we're absolutely happy to have you bring a friend along if you've got somebody who you think we might be able to help. And then we're also looking forward to the early Pi Day, the return of Pi Day. We did this for the first time last year. It was a great event where clients got a pie to celebrate March 14th, 3.14, though we're doing it a little bit early because we wanted to do it on a weekend. So you're going to have your pie in time for Pi Day. The event will be Sunday, March 11th, and it's going to be in Edmonds. Look for your email and look in your mail for the invitation and the opportunity to RSVP so we can reserve a pie for you and your family. All right, so final thing that we want to talk about is what are the conversations about real estate that we can have with you in the first quarter of this year. The first one is let's talk about your real estate related plans. If this is the year that you want to move up, get a bigger home, downsize, get a home that better fits your current life, or move across the region, just let us know. We'd be happy to talk to you about how to make that happen. Likewise, if it's time for you to make your purchase of your first home or your first investment home, or you want to mentor a family member or a friend through that process, we're here to answer those questions. Also, right now, like many of you, we're getting our W-2s in line and all of our tax information in line so that we can file our taxes over the coming months. If you've got questions about taxes and real estate, we're here to answer those questions for you or provide you referrals to the right resources for those. And then also, this is a time where a lot of clients are reaching out to us about remodels and home improvements, opportunities for them to improve the value of their home, both so that they can enjoy those improvements today, but also make sure that those improvements best support the best value of the home whenever they choose to sell, whether that's in a year or 10 years. And then the final thing that we would like to ask you a favor of is referrals. Who do you know that we should know so that we can help them in the same way that we help you? If you've got friends, family members, colleagues who are looking at any of these things that we've just talked about, we would enjoy the opportunity to connect with you and to connect with them and help them in a high quality way. Thanks for catching up with us here in the start of the new year. We look forward to seeing you at upcoming client events as well as throughout the rest of the year. Best wishes for a great and prosperous 2023, and take care.